Good evening, everybody, and welcome back to episode 108 of Enter Crypto, where twice a day I keep you informed and fully up to date on all things crypto. If you're interested in that, then subscribe to the channel. I put out a new video every 12 hours. So the story of the morning is an article I've found in Crypto News. It's titled "Experts Predict Crypto Prices to Explode to All-Time Highs If This Happens." So let's find out what needs to happen for Bitcoin's price to go and break all-time highs. So, prices of major crypto assets could explode higher if US economic data this week indicates that the Federal Reserve could soon be done with their interest rate hikes. So what they're talking about here is the famous Fed pivot. That is to say that when the Federal Reserve, which is the US, the United States' central bank, they have recently been hiking interest rates to attack inflation, because inflation is, I think it got to as high as 9.1%, I believe. I think that was not last month, but the month before. That was at its highest, and everyone was hoping that inflation had peaked. It looks like if it continues to go down like it is now, that would have been the peak, but we'll see, because nobody knows the future. We don't know, it could just go back up again if something bad happens. And so, because they've been raising rates, everybody's asking the question, when are they going to stop? For example, next month or this month, are we going to get another interest rate hike, or are they going to stop? Or are they even going to lower? I think that's very unlikely, in my opinion. I just think I cannot see them lowering the interest rate. It would be too drastic. So they may just taper off and just kind of go with a very low 0.25 interest rate, 25 basis point interest rate hike, and then maybe go to zero and not do anything for a while. I think they'll want to see what is going to happen. But the moment that they start changing the interest rate and start lowering it is really what they call the Fed pivot, and that's what these guys are talking about. After a strong week for Bitcoin and many other cryptos last week, traders are now looking for any clues of what could fuel the next leg higher. And with a massive release of important US economic data expected this Wednesday, the positive trigger traders are looking for could come sooner rather than later. Most important of the data expected on Wednesday will be the Producer Price Index, the PPI, which measures the change in prices paid to producers of goods in the US. It differs from the better-known CPI, which is the Consumer Price Index, which is the change in prices paid by consumers. But still gives a good indication of what is happening with inflation. We often hear in the news about CPI going up, down, and everybody worrying about it. But actually, it's not the most important thing, or to most people, it's actually to most financial analysts, it's the PPI that's more important than the CPI. It just gives a clearer picture of the future. Whereas the CPI is a bit of a lagging indicator, shall we say. The number is expected to come in at minus 0.1, and any reading lower than that could fuel an explosive rally for Bitcoin and the broader crypto market. Earlier this month, a CPI release for December showed that US inflation had fallen to 6.5% annually, down from 7.1% in November. The next CPI release in the US is expected on February the 14th. High inflation is transitory. Among those who have already predicted a return to lower inflation is the popular crypto trader and economist Alex Kruger. Writing on Twitter on Sunday, Kruger reminded his followers that the currently high inflation level is transitory, and that inflation will trend lower over the long term due to technology and an aging population. It should be crystal clear bots will make wage inflation evaporate, he said. Here's his tweet. High inflation is transitory, inflation trends structurally lower. Driven by technological advancements and aging populations, it should be crystal clear bots will make wage inflation evaporate. The assets that benefit the most from falling inflation are tech equities and nominal bonds, with the longest maturities. These are attractive price yield levels for long-term investors who hold the falling inflation view, particularly the latter. And what he's talking about here really is using technology and machinery and robots and artificial intelligence that's all coming could, well, it is actually, it's not even that it could replace human labour. It already is. If you look at a car factory, a Tesla car factory or a Volkswagen, any of the big names, it's all robots that's making the parts for the cars, for the brand new cars that they're making. There's very little human labour involved, and so what that's done is that's obviously it's lowered the demand for human labour. You just don't need as many people. So if you don't need as many people, then there's less. You just don't need to pay people as much anymore, because there isn't the competition there. So that's kind of the deflationary argument for a lot of technologists. A lot of people into technology say that the same will happen with crypto, all these types of sort of emerging technologies, that they will be in the long term deflationary. So lower inflation is the main factor the Fed is looking for before it will stop its current rate hikes and eventually return to cutting rates. It is believed that the lower interest rates will benefit crypto and virtually all other risk assets. For instance, the well-known crypto bull and former investment banker Mike Novogratz said last year that he believes Bitcoin is going to the moon once the Fed pauses its rate hikes. Mike Novogratz, for anyone who doesn't know, is the CEO and founder of I think it's called Galaxy Capital. They're a bit of a venture capitalist firm. They invested in a lot of Ethereum-based companies a few years ago, and I think he got lost a lot of money on a lot of them, but got successful on a couple of them, and so he's done well for himself. But he does have a traditional finance background from Wall Street. So the massive release of economic data on Wednesday happens during a week which is already expected to be strong for crypto by several analysts and commentators. With Bitcoin establishing itself north of the 20k mark and ETH trading above 1.5k, popular influencers such as Ivan on Tech declared that Bitcoin FOMO starts now, while the pseudonymous on-chain analyst Plan B has said 15.5k was the bottom for Bitcoin. This is Plan B's tweet. My two sats on Bitcoin price. November 2022 low 15.5k was the bottom. Bitcoin has crossed short-term holder and will rise into 2024 halving and subsequent 2025 bull market. Several on-chain signals confirming the short-term holder signal. 2024 halving will be 32k and 2025 bull market will be 100k. So now this guy actually got this completely wrong. In 2020 he was tweeting that Bitcoin would go to 100k. I mean, I've even seen him tweet stuff about it going to 200 and 300k for 2020, not even for now. So he's become a lot more conservative and realised he was wrong. He actually never admitted that he was wrong, but he was severely wrong. Never admitted it, and so I kind of always lost a little bit of respect from me. So that's what I've got for you this evening, guys. Remember, everybody, to please subscribe to the channel, join my team, and I'll keep you updated on all things crypto every 12 hours. Smash that like button if you feel you got value from this video, and I'll see you all in 12 hours time.